All right, so just for a quick strategy of just what I'm going to do this week, I'm suspecting that price is going to this naked breaker up here. So let's get rid of some distraction here. So we had a breaker to the upside. It's just we're really deep into it, and one of two scenarios can happen: is that it gets shut down right there, and it just ranges down here. The other scenario is that we can go up here to 40.41, and I don't know which one is more likely. I just know that trade level to level. I mean, it's almost better if you just sit out this week, and I don't know. It might be a little too hard for me, but I'm thinking so there's this naked 15 and 30 minute breaker there. So it's highly likely that I don't know, it could just chop here. So you just don't know, and the best move would be to wait for a 30-minute breaker to the downside. We get extended over a little bit, and then we wait for the break to the downside. It's just the best way to do it. Preserve capital. Wait till Wednesday. There's a lot of speculation, and oil being so low, we could get some kind of rally there. I'm not 100% sure. We would need to see equal lows there. In terms of like the weekly, we're at this monthly bullish order block, and we're getting close to the end of the month. So we got to see if it holds or if it breaks down. And I'm not sure if we got a naked monthly here. Right. Oh, that's a naked weekly. I don't know. It looks like it retested. Some discretion going on here, and then it looks like maybe we had a naked. No, we didn't have a naked monthly to the upside, but it looks pretty bad. Looking at oil, it just we might get some kind of rally up here, unless we got rejected already. Yeah, I don't know. We could get some kind of rally there, get rejected, and come down. That's probably, this spike up into here is probably Q3. We spike into here into Q3, Q2, we come up into here. End of Q2 going into Q3, we bounce off and we break to the downside. That's what long-term forecast is for oil. It looks like we just got a weekly bearish order block move. It was a bigger range. Now it's smaller. So it's trying to push the oil down. Let's see if this, the script's still working. So, I have no idea. A lot of these moves that come out of here are high risk. If we get a move up to 40.41, I don't know, that's maybe like a 3% move, 5%. Let's take a look. So we were looking at SP 500 here. If we were to, I guess, technically go from here to 40.41, which is pretty much this resistance, like 4% move. Like, is it worth it? I don't know. It's definitely kind of up in the air. If we were to just, looks like fill this other daily fair value gap. I would first need to see a 30-minute breaker, and in order to take a 1% entry to the upside, and most likely I will for 30, like a 1%. It looks like 4% is worth risking for 1% of my equity. So that 4% move could be I don't know, like 15 to 20% of like potential return. 4% move. It's pretty big. It's like roughly 200, possibly 300, 500 from the 1 micro. But so this is pretty much the trade plan: is go low and slow. On Monday, Tuesday, there's no news. We're going to use the information we have now. The information is that we have a 4-hour breaker. We did not totally cancel out that move. We did not invalidate that move. It's still in effect. So if we get a 30-minute breaker to the upside, we're going to try and get in with a good entry alpha. This week, come Wednesday, it's all about entry alpha, because what I hear coming on the news is that it's too hard for the average person to trade, and it's true. It all comes down to entry alpha right now, because it's everything's going to move a lot quicker. It's going to move faster. It's going to move quicker. Everybody's got some expectations of what they're thinking, and everybody's trying to front run some kind of move. And when when people try to front run or get ready for a move, then that's when there's a huge squeeze to the opposite expectation. So if our expectations to the downside, we're going to get a nice pump. And I don't know where that's going to go. We got a target, which is this 4-hour naked breaker of 40.41 right here, and the fill of the daily fair value gap. That's kind of just the best kind of estimate we got of where it could go. And then from there, then we start adjusting for a good position for risk to the downside. Let's take a look, get some context with an oscillator. That's not the oscillator. So yeah, it looks like it's still red. We'll wait until it turns green for the most part, and most likely be when we break the 30-minute order block, bearish order block. And it looks like it's already above. It's already above there. So we only got roughly 20 minutes until it breaks. So we need to see it break at some time. Maybe it comes down, fills, London comes, and then New York it fills, and if we get a break, I don't know. And we probably come down here. I don't know. Anything goes. We're just waiting until we get a break signal, and then we'll start getting ready to go long. One trade to the upside, one micro. And then when Wednesday comes, this is, I guess, another part of the plan. So I can't use regular price action entry signals for something that's news related. News related moves a lot quicker. And that one's, we could still use technical analysis and market structure. That's what this comes in handy for, these market reversal alerts. We're going to be looking for a 30-minute to the downside come Wednesday. And then, if anything, also a 4-hour to the downside come Wednesday as well. And retest, resumption, and we're going to be looking for that and making sure it's confluent with what we see in the VIX, the dollar, and the yen. The yen is it's trying to run away. So you know things are bad when the yen's trying to run away. The euro, it almost looks like it's getting ready. It's ready to close the week and break the weekly market structure. So it's looking pretty bad, just from a currency standpoint. And with the currencies, it's implied with the bonds. Bonds translate into currency, especially the bills, the treasury bills, the 4-week, 8-week treasury bill. They're just as good as cash. So things are bad. And the strategy for the entry alpha come Wednesday is going to be this volume footprint bot for entry alpha. So we got these 5 signals, and we told it we need a minimum of 4 to get in. And we're going to use our forecasting software. We got some kind of peak coming in the 23rd, 24th, and then we're going to be doing the intraday analysis too. So we're going to be using in tandem, looking for a market structure break as the chief primary decision for looking short. And 15-minute is get ready. If we break to the downside, 30-minute is okay, we need to be looking for an entry now. And then we will see if that's in line with the daily. This is a weekly intra-week analysis. We're going to look for an intraday analysis around 23rd, 24th. And we'll make sure that we're not going to be thrown off course. We're not going to be faked out. And we're going to get in at an appropriate time, and that we start trending. And then once we get our first entry, we'll hit short, enable, and then we'll hit one-time entry. And then we might have also something that's got a loaded clip ready to just start dealing out entries for entry alpha. And if it starts going really quick. So that's another part of the plan is we'll get one bullet ready and then a whole clip of 10 micros ready, so we can start dishing it out if price just starts going quick. We don't know what's going to happen, but we need to be prepared to hit the button for the clip to unload. So that's kind of just the other part of the plan. And then we're also going to try to scale in like we did Friday. Friday was something beautiful. We avoided the chop, and we're going to use this 3-minute and 5-minute trail to get by the dip, sell the rally signals, and then when it hits it, we'll turn on the bot. And the bot has the entry alpha, so we'll trust all of the process of it getting in to the volume footprint bot based upon these 4 or 5 factors for minimum required in the last 8 bars. So that's kind of just the plan. My thesis is that price action works for non-news days, but for news days, it's very, very volume driven. So you got to have a volume kind of entry standard, and that's kind of what this whole project with the volume footprint was all about, was just trying to tap into that entry alpha. And this entry alpha works like within non-news days and news days, but I've seen it works better in news days because with the news there's higher volume of purchases, and it just makes the signals really clear. Those areas will most likely to be fended because prices will be moving too quick, and that's just the whole rationale with that. So that's the plan. The plan is go low and slow. When it hits the news day, make sure we're in alignment with the market structure, as this is the chief decider of what we're doing based upon time and price. Once time, of course, once the big move comes, it's going to break, and we're going to trust the bot to get in at a reasonable entry for entry alpha, and think that that's the best that we could do. Better than a human. So that's kind of just the whole idea. We take this as a verifier, intraday, intra-week, intraday. We take this as a chief decider of our bias and when we're looking to enter, and then we look to the volume footprint entry alpha bot to get in a good position to where the chances of it getting stopped out are low, the chances of it succeeding are high in the direction we want to go. And that's kind of just pretty much the trade plan for this week. Very kind of sophisticated or complex. Call it whatever you want, but that's kind of just the way I'm approaching it, because it's the whole falling knife concept. Like, how can you catch a falling knife unless it's with a computer or AI? And that's what this volume footprint project was about. I've been, trying to, I pretty much back tested a setting, and that's kind of what you see here. And then I decided, okay, I'm running with it. I've been using it ever since for a whole month, and it's been working phenomenally as far as when I turn it on and when I turn it off for news events, and getting me in. And when the market moves fast, these entries are within the 5-minute fair value gap, and that's really difficult because when the psychology with a person is in real time trying to be in a 5-minute fair value gap is really difficult. In a good risk-adjusted way. So I think there's no other explanation. I've pretty much laid out the process, the plan, low and slow. If the trade doesn't go well Monday, wait till Wednesday. We don't want to get ahead of ourselves. And if it doesn't work out Wednesday, we wait till next week Monday, and then we see kind of what's going on. Is there a change in sentiment? Is the plan different? But that's pretty much the overall plan.